Hello, everyone. Welcome. Let me just pull up our opening slide. Thank you, everyone. Welcome to session 4 of KDC's Boost Camp. We're so happy you're here with us today. If you've come along with us throughout this Boost Camp, we're on session number 4. Last week, we heard from Leslie Watson, Executive Director of Cooperative Development Services, on making membership count. If you missed it, you can find it on our YouTube playlist, which will be linked in the chat, as well as links to register for more sessions in the coming months. This session will be recorded, so you can check back on the recording in case you need a recap. So these sessions are sponsored by a grant from Cooperative Development Foundation. Thanks to that grant, we can offer food vouchers to make it a little bit easier to attend live. If you've had any trouble, if you didn't get an email about the food vouchers, you can email me at hannah@kdc.coop, my email will be in the chat in case you'd like to participate in that. With that quick admin out of the way, I will quickly introduce our wonderful speaker for the evening. Mavery Davis is a certified public accountant, breaking the chains of poverty and creating wealth. He is a CPA by day, serving as Director of Lending for New Economy Works, West Virginia Seed Commons, and a community organizer, a motivator, and the Financial Literacy Bootcamp founder by night. With that, I will hand things over to Mavery and hop off the slide with one last note. Just if you are on this call as Noemi and your name is not Noemi, please remember to change your name. Other than that, thank you so much, and I will share your slide so we can get started. Let's see. Oops.
All right.
Oh, wait, I'm sorry, wrong screen. One moment.
That's okay. Thank you, Hannah. While Hannah's getting that slideshow up there, it's actually just a welcome. So, I want to welcome folks who have a great deal of knowledge about accounting, bookkeeping, and taxes into the room. I want to welcome those who have a little bit of knowledge or some knowledge. I want to welcome those who don't know anything about any of this stuff, wherever you're at, like on the spectrum of accounting, bookkeeping, taxes for your co-op. Just want to welcome you into the room. Can you go back a slide, I think? Yeah, back the other way. All right. So that's the welcoming y'all into the room. Next slide, please. And before we get too deep into it, can folks take 30 seconds to introduce themselves, your name of your co-op, the type of co-op, if you know what type of co-op you are, and what you hope to get out of this session today. And I'll just y'all could start it off, and then you could pass it to somebody, whoever feels comfortable sharing.
Hi, my name is Lacey Molesky. I am the cooperative developer for Common Roots in Meadville, PA. We are a common land trust. I am actually a new hire, so this is just my second month. So I'm trying to learn as much about co-ops as I can. There are also my coworker, James. He is here. He's with Autumn in that group. So he could also probably explain a little bit more about who we
Awesome.
Okay, I was hoping you guys heard me. That was the other thing. I was the first to speak up. So I was like, oh dear, oh no.
We heard you.
Sorry, icebreaker there. So hopefully no one after me will have to feel nervous. So I already did it for you guys.
All right. If you can hear me, I'm James, Common Roots, Meadville, PA. We have a renting cooperative. In that, with the dividends or profit sharing, our folks earn equity by living and taking care of the place that they live in, participating in meetings and stuff like that. So, yeah. And we are, like Lacey said, a community land trust. So we have two renting cooperatives right now, and we're just getting ready to open up our third one.
We'll just do this room.
Yep,
And
I'm
we'll pass.
Melissa. I'm with Northwest Pennsylvania Investment Co-op. And I'm learning more about co-ops. And we purchase, renovate, and lease commercial space to entrepreneurs and nonprofits whose values are in line with what our vision, what our values are.
Yeah, great. And I'm Autumn. I'm also with the Northwest Pennsylvania Investment Cooperative, community owned real estate investment co-op in Meadville, and on staff at Keystone Development Center. And part of that work is kind of convening Cooperation Meadville. We're doing watch parties of these boost camps, so we're all in a room together. Sorry if that's annoying. But it helps to make meaning of things we learn. And so we'll pass it down the line to Lucas.
Sweet. Hi, everybody. I'm Lucas. I'm in a new worker cooperative here in Philadelphia called Perula Gardens Cooperative. Sorry, I have a little bit of a stutter. We just started in March. We're a 7-person worker co-op doing gardening work, mostly in Northwest Philly. And we don't have that much business experience, so all of this taxes and accounting stuff is really awesome for us. So thank you for taking the time to teach us. Crystal, do you want to go next?
Sure. Hello, everyone. I'm Crystal Davis. I'm in South Carolina. I am
Davis. I'll just Davis clan, just shout out
right.
Davis clan, that's all.
I am one of the co-founders of the Southern Bee Alliance, which is the Southern Birthing our Empowerment and Entrepreneurship Alliance. We are newly formed. We are a worker owner co-op. We've both done some pretty extensive training, but still trying to get things off the ground. We're currently focused on our board members and membership. But we are basically in the Carolinas, because we have partnered with another birth worker in North Carolina too, to be able to try to dismantle, well, our work is to dismantle the Black maternal health crisis that we have going on. So our worker owners are doulas, childbirth educators, lactation counselors, and then we also have a second component that focuses on early childhood education, so childcare, and specifically because of the preschool push out we have for Black and brown children who are under the age of 4, who are getting expelled from preschool. And I will, what, did everyone go? Hold on. I gotta move around. Okay, so I will popcorn over to Elizabeth. Did you go already? Okay.
I can go. Thanks, Crystal. And thanks for what you do. I'm a death doula, so I'm on the opposite side of the life cycle. But I'm also a mediator. I'm here in Colorado. We are currently working with an attorney. We are like in the weeds right now, trying to get our calculation for patronage, and we're going to be a partnership because we offer services. So we're mediators. We work with organizations with any like people challenges. That's who we hope they call us. And we've been working together in a small business providing mediation, but now we're converting to a co-op. So we are working with the attorney, and I'm here to learn more about this because we're literally working on our equation right now, and this is so complicated. So we just need to learn more. I'll pass it to Jason.
Thanks, Elizabeth. I'm actually working on a very similar thing right now. I have a variety of co-op hats, but one of them is that I'm on the money team for the Artisans Cooperative, a member-owned marketplace alternative to Etsy. And we're also working on figuring out how to do patronage, and that's something I'd like to see tonight. Kind of my main hat is I'm an enrolled agent based in Pittsburgh, PA, and my practice focuses on tax compliance and tax resolution for small businesses. And I've been trying to kind of be better positioned to serve worker-owned businesses as well.
Yes, we need more of you in the room, Jason. There's a shortage.
My name's Jennifer. I'm with Mountain State Co-op. We're an agricultural cooperative out of North Central West Virginia. We started out as a farmer cooperative and have quickly grown to value-added producers. So people making like salsas and jellies, jams. So we have about 30 members now. We are looking to go into produce here shortly. And I have my bookkeeper with me here today too. And we're just trying to figure out more of the laws around the tax with cooperatives.
Hi, I can't tell if I'm the last one to go or not. I'm Ashley Cloud. I'm with the French Creek Arts Collective in Meadville, Pennsylvania. We're a collective, we're an artist co-op. Our main focus is bringing arts programming to our community, and we're also in the process of getting a physical art space up and running. We've been operating for about a year, but we haven't really opened up to membership until recently. So we've mostly just been in a we offer programming, maybe we take in some money and then we're just hoarding it until, we have our physical space. But now that we're getting ready to move in, we're really starting to have to budget and get smarter about our financials. So yeah, I'm here to learn all I can.
I think we got Anwar and then Ron.
Sure. Hey folks, my name is Anwar. I am at a food cooperative, so Durham Co-op Market, Durham, North Carolina. I love this series, so I'm just here to learn. But we're a 10-year-old established food co-op here in Durham, North Carolina, and just trying to pick up what I can. I love hearing about everyone's co-ops here, so looking forward to hearing more from everyone too.
Let me get off mute. Hi, everybody. I'm Ron Gatos. I'm in Pittsburgh with Keystone Development Center as well. And I'm always interested in learning more about the nuts and bolts here. Kyle.
All right. Has everybody introduced themselves? Seems like it.
I just hopped on. I'm Noemi Gishpence. I'm with Keystone Development Center. Great to be here. Hi, Mavery.
How you doing? All right. Hannah, can you go to the next slide, please? All right. So now so we're not getting into the nuts and bolts just yet, but I want to invite you all to recall a time and maybe close your eyes if you can and think about a time where you faced an accounting, bookkeeping, or tax challenge within your co-op, and was there a solution to that challenge? Are you still working through it? Things like that. So just kind of close your eyes and think about that to yourself for a moment. Were you by yourself? Were you with a team? What were the emotions like? Was it pleasant? Were people stressed out? Like, what was it? Did you get to a solution? Did you not get to a solution? Think about that. Hold it. And then what we're going to do is actually break you all out into pairs, right? So break you out into breakout groups. I think we got one room that has a few people in it. So if we can, Hannah, can you break folks out into just random pairings? And what I want you to do in there is have a conversation with each other. Try to split the time. I'm going to give you 6 minutes to share. Try to split the time evenly and each person share about this challenge that they recalled and any solutions that they had, and try to split the time evenly and give each person in your pair a chance to share. And really, your job is, if you're not sharing, you're listening, right? So, Hannah, are you able to get folks into the breakout rooms?
Yes, I will open those rooms right now. Recording again.
All right. So first of all, how was that? Anybody got any trauma?
I do.
So tell me about it. Share, like, what were the challenges? What were the solutions?
Jason, you want to go? You were just talking about what you had to do.
Yeah, so the one I was sharing was a co-op that I'm a part of that realized at the last minute that it had a 1099 filing requirement. And so thankfully, like, because I was on the board, that we I'm able to e-file 1099s, and so that was a pretty quick process. And we called the people that we had to issue 1099s to, and it's like, hey, please get us your EIN. And sort of did that at the 11th hour and managed to get it in, I think, like 10 p.m. on January 31st.
Okay. There's some stuff to unpack there. Y'all raise your hand if you're aware of what 1099s are and what the issues are with those. Okay. So we don't need to talk about that. What what were some other challenges that folks faced?
I was on the board of a nonprofit that didn't automatically pay its payroll taxes
Hmm.
and got into a lot of trouble with the IRS. And not only, did it owe the taxes that it owed, but then it owed late fees and fines and fees and interest, and it piled up into a scary amount of money.
Mm-hmm. I'm curious, how did you all address that?
We tried a couple of times to file an offer in compromise, which is basically saying, look, we don't have the money to pay everything that we owe. Can we just have some of the fines and interest waived so that we could just pay the part that we owe?
And sometimes on those offering compromises, you can get a payment plan mixed in with it. So yeah, if you get in trouble with the IRS, don't panic. There's typically a process to work through it, right? Like it happens, this stuff happens. And I would just say this about that. The biggest problem you can have with the IRS or any taxing agency is not communicating. Like, they catch you on something, the best thing you can do is start to work with them and communicate. Even if you don't have what you need, like, stay in communication with them. They're more willing to work with you and help you get it resolved. It gets a lot worse when you ignore it, because that's our natural response. Oh my God, if I don't say nothing, maybe they won't say something, But in these situations, it's actually better to communicate and over communicate, and they'll help you. They'll typically help you. There's typically a process, such as the offering compromise, or other things that you can work with to get those situations relieved. All right, one more. Let's do one more. What were the challenges?
I'll share. So we actually just about a week or two ago, and first of all, finding someone to do our taxes. Second, once he did it, he had to file for an extension because he notified us that what we were filing under, or like our C Corp, was probably not the best fit for us in our operations and what we're trying to do, and also within our state. So we found someone to help us, and he just recently submitted our letter to the IRS to stop our C corp, and then we're gonna meet with him next week to discuss how we're gonna move forward.
Awesome. Awesome. So, as you can see, the accounting, bookkeeping, tax challenges is just an ongoing thing. And a lot of us, we're pretty much facing the same thing. Naomi has to leave. That's fine. All right, Heather, can you go, I guess, to our slideshow? I don't have to teach you guys anything, apparently, because y'all pretty much get it, right? And, you know, in an hour session, like, you're not gonna get everything you need about this stuff. So the biggest thing I hope you guys picked up out of this and out of the pairing sessions is, like, get help with this stuff. Talk to people within your co-op about, like, the issues and challenges you're having. Try to find a professional. And yes, it's hard to find people sometimes, but and you know, you got to find somebody who actually has the capacity to do it, because a lot of times what you'll run into is people will take you on, but they actually don't have capacity to work with you, right? So the better you can arm yourself with, like, knowledge about the situation and exactly what you sort of need them to do, the better off you'll be in selecting a good practitioner. So, you know, we're going to talk about compensation, profit sharing, and worker co-ops. Next slide, please. And I want to give a shout out to the U.S. Federation of Worker Co-ops. These are actually open source slides. Mavery did not put anything together for this workshop. I am a board member of the Federation. So there are certain tools like this, and also want to give acknowledgments to where much of this content has been derived from folks like Bruce Meyer with Wagner CPAs. They're great to reach out to, but they're often way booked up. But you can often get at least some kind of guidance from them and some kind of response from them, right? ICA Group. A lot of the information in these slides came from ICA Group. Another great resource organization, DOWI, Democracy at Work Institute, and then the Boston Center for Community Ownership is responsible for, like, the slides you're going to see. And I'm just a messenger doing my best to communicate it to you all. Next slide, please. So we're going to talk about worker co-ops taxed as subchapter T corporations, right? So these would be co-ops that are like cooperative corporations, C corps, benefit corporations, or LLCs that have elected to be taxed as a corporation it can be it can benefit from the laws under subchapter T. High level 1,000-foot view of what subchapter T is. It's the federal regulations, you know, stipulating the tax benefits and things for cooperatives, and the generally, like, the larger your co-op gets and the more revenues that is making, the more beneficial it is to, like, switch to, like, a subchapter T type taxation, because you get, like, the co-op, the collective, the cooperative as a whole gets a couple more tax breaks. Like, obviously they get to deduct, like, the wages, the W-2 wages and things like that. But as a subchapter T cooperative, you would also, any patronage, dividends, or, you know, profit sharing, that was done, you would get to deduct a portion of that. The co-op would get to deduct a portion of that from its from the corporation's taxable income. And then the member or the individuals who are entitled to that patronage would receive a dividend, and it would also be taxed as income along with their W-2 wages, but it's often a little bit less. And the bigger your co-op gets, the more beneficial this is. Is this true for only worker co-ops or other types of co-ops? Let me look at the regulation real quick. So subchapter T, I don't want to misspeak. Folks primarily engage in agriculture, utility, retail, worker-owned enterprises, those types of organizations. Next slide, please. So first, one of the first questions you need to ask yourself is, if you're a member, indicated by the fancy top hat, or you're not a member yet, you don't participate in profit sharing. So, some co-ops may be multi-stakeholder. Some workers may be members, actual members of the co-op. Some workers may not be. They may just be employees, so they wouldn't participate in the profit sharing, right? So, only a member who was actually received written notification that they're going to receive patronage would have to worry about that. Next slide, please. So what this slide is getting at is what I was just sort of talking about. If you're a member, you may also be getting paid W-2 wages, right? So you're gonna, with that situation, you're still gonna receive a W-2, which is taxed on your regular individual 1040 income tax return. But if your co-op issued a patronage dividend, you would receive an additional what is called like a 1099 PATR or 1099 patronage. And that would be an additional tax document or form of income that you would have to recognize at the, on your personal tax return. That person that says me too down there, they're not, if they're not a member, they wouldn't receive a 1099 PATR, so they wouldn't have to worry about that. Next slide, please. So talk a little bit about like how the income is broken down. I'm a longer term member and get a higher regular compensation. I'm a member with extra responsibilities or special skill set and get higher regular compensation, or you just get regular compensation, right? So your co-op is going to set like your compensation policy and things like that. But where this fits in is like that patronage dividend is going to be based on like your level of contribution to the bottom line. Typically, like it's based on hours worked or some level of production, and that's going to be attributed like to each member based on their contribution. But your co-op chooses your base compensation, and then your profit share is governed by what your co-op sets up to like allocate those profits based on. typically based on, like in the worker co-op, based on like hours worked. Next slide, please. And so after, after all the income and expenses of the business come out, what's left over is the surplus. So any of that surplus is distributed as patronage, defined by the hours work, which is sort of what I explained on the last slide. But your co-op's got to get to a point to where it has profits before any of this is even an issue. Next slide, please. So in co-ops, we just get used to the terms, right? Like we call net profit, we call it surplus. And in traditional business, when you see that, they're talking about like the net profit, right? So surplus and profit, it's the same thing. It's just a different term. Like in co-ops, we use surplus as opposed to profit. Next slide, please. And then your surplus can be distributed with some cool co-op specific choices, and some of the profits can the co-op can choose to say a certain percentage of the net profit is going to be shared amongst all members. And then another percentage of like net profits will go back in to like a collective account, or like a surplus account. And I've seen co-ops use this to, like, say they're planning to add more benefits for workers down the line. And so instead of like distributing out all of the profit, they'll take say 20% of it, distribute it as dividends, and then the other 80% goes back in, and they use it as like to build reserves so that they can do other things down the line. But again, all of that is you decide how to do all of that, like within your co-op, and you can make some cool choices about what to do with that profit, which is the cool thing about co-ops. Next slide, please.
Hi, Mavery. There's a question in the audience.
Oh, I didn't see that. What did it say?
Yeah, I can't, maybe James, Melissa, or Autumn could clarify, but they ask, is this true for only worker co-ops, or is it true for all co-ops?
Yeah, Mavery addressed that. Thanks, Ron.
Okay. Sorry, I wasn't listening.
No, it's fine. It's primarily it's like agricultural co-ops, utility co-ops, some retail, and then like worker co-ops.
It seems like any co-op that might do patronage dividends, so like that like distributes dividends based on usage of the co-op and its services could elect for the subchapter T. Is that true?
Yes, but they, to qualify for subchapter T, like they have to be one of those 4 types of, basically a corporation, right? Like, so one of the forms of a corporate entity would qualify for subchapter T. And like the biggest difference is like a lot of co-ops are taxed as LLCs or partnerships. And like with an LLC or a partnership, you don't get any of those types of choices when it comes to like if your business has a profit or a surplus. All like in an LLC or a partnership, all of your surplus has to be distributed out to the members. Now, again, that's based on like your partnership agreement or your operating agreement. It'll tell like you'll work out like how you're sharing that profit, but 100% of it has to be attributed to all the members that are listed on that LLC, right? I'll give you a quick example. In our co-op, the Ajani Group, we typically the way we do it is we'll distribute the profit based on the contracts that we bought in individually, right? So like last year, we didn't do that much business, right? And I did most of the work. So we took all the contracts that were brought in, and it turned out that I had brought in 80% of the revenue. So when we got down to the bottom line and we had a surplus, I distributed out 80% of the surplus to be taxed to go to my K1 that would be taxed to me, and then 20% went to the other 3 members in our co-op, right? But the way we decided to share that profit was something internal that we decided, but we couldn't say, I'm only gonna recognize 20% of that profit and distribute it out to the members, and then the rest is staying in the business. You don't get that. Somebody has to pay taxes on all of that in the LLC. Whereas in what this slide is trying to show you here with the worker co-ops tax as subchapter T is that there's just a little bit more choice in how and where the profit is taxed and shared at. And with subchapter T corporations, you could have at the corporate level, potentially the patronage would essentially become an additional tax deduction for the co-op. And then any questions? I guess I'll just stop there and let folks ask questions, because this is where it starts to get really hairy.
We're still pretty far from like figuring some of this stuff out, but I was just curious if you could speak in like a general way about we're all W-2 workers right now, or there's like 7 of us who are W-2. We have a few 1099s who aren't actually worker owners. But do you have like general guiding thoughts for like as we're setting our hourly wage for W-2 time? Like my understanding is it's tax smart to pay ourselves less for W-2 than get more of it through worker patronage at the end of the year. But like what like basically we just choose, do we want money now or later? And then there are different tax implications.
Yeah. So for you, like your W-2 wages, right? Any wages that are paid on W-2, the individual employee actually through their W-4 tells the company, the IRS, how they're going to be taxed, right? If they're an individual that's married, or if they're an individual, they fill out their W-4 a certain way, and more or less taxes will come out based on that. So just as far as your W-2 folks, right? If there's somebody that's normally has a tax bill, just make sure that their W-2 is set up appropriately so that enough is withdrawn from your W-2 wages, so that at the end of the year, when they file their W-2, they're either getting a refund because you all withheld too much, or they're exactly breaking even and they don't owe any taxes, right? But the W4, which is attached, which dictates how things are withheld on the W2, is sort of where you want to kind of make sure that those things are in alignment between the individual member and like their W2 wages, right? Does that make sense?
Yeah, totally.
Okay. And then, right, and then your other thing, right? So all those W2 wages are essentially, technically, you might be doing something technically wrong if you're an LLC and all of your employees are listed as members, like on that LLC. Technically, owners of LLCs shouldn't be getting W2 wages.
We're a cooperative corporation in
Oh,
Pennsylvania.
okay, okay, so you're a co-op corporation, so you're good to go. You can do W2s and you're fine. And so now, like, you're concerned about what to do with the 1099.
No, it's just like we could pay ourselves less through the W2 to generate more surplus at the end of the year, or we could pay ourselves more through a W2 and have less surplus at the end of the year. Is either smarter from a tax perspective?
It depends on like what you'd have to. What I would do is I would prepare it both ways, right? I would work with your accountant to say like, hey, if we paid ourselves less and had a bigger bottom line, right? How much, like, what would our tax liability be? And how much could we deduct from that based on like our patronage if we paid the rest out, like in a patronage dividend? How much would that reduce the tax liability on the corporation, right? And then the individual members would have to consider, once that patronage is paid to them, is that going to change their individual tax liability, right? And so some of that is you guys are probably going to have, I would get a few members. I would work with all the members and say, hey, let me look at your personal tax return and see what, and see what the outcome was, and sort of play with like, if we pay this out to you in W2 wages, this is what your outcome might look like. If we didn't pay that out to you in W2 wages, but it then became a patronage, to my knowledge, generally, it, um, to my knowledge, dividends are actually taxed a little bit at a lower tax rate than general tax rates, right? So it's probably more beneficial if they had a little bit more like patronage income, because the tax rate could be a little bit lower at an individual standpoint. But again, that's hard to say in a general sense, because as eventually all of this flows to the individual tax return and folks' individual tax situation. It could, it could vary, but overall for the business itself, uh, if it's paid out in W2 wages, that's all going to get deducted. Reduce the bottom line for the co-op, and if you allow to go into patronage, you just have to consult with those individual members to see how much is this going to, them getting that as patronage income, how much is it going to change their individual, because none of the taxes are going to be withheld for them, right? So it could put members at in a bind where, they haven't withheld anything and now they're getting this money, and they may have to pay taxes on it, whereas W2 wages, some of the tax liability has already been taken care of. There's a bunch of questions going off. Let's see if I can address them. I don't know. I don't know, Lucas. Does that feel helpful, or
Yeah, I mean, it's also
more?
case by case, and it varies by state, and it varies by what the different tax rates people are at. So yeah, I think just figuring it out. It seems like generally speaking, that like the patronage is taxed at a slightly lower rate. We may owe a bit more like business taxes on it, but fewer pay little taxes. So I think it makes sense to at least kind of like keep them a little bit even. But yeah, we're kind of figuring it out. This is great.
Okay. I hope that was helpful. I try not to talk in circles to people and like get a you know, because this stuff is going to take more one-on-one time, and like looking at individual tax returns, looking at the how that activity flows from the corporate level to the individual, and seeing like, what are the implications, right? Because ultimately you want to do what's best for your members, right? Like, you know what I'm saying? So yeah. So look at some individual things case by case, and then try to make the best decision that keeps things sort of balanced, and where you all are paying less taxes overall, like from like the co-op standpoint, because the more money that's saved with the co-op can go back to the members in some sort of way, right? So the more you can save overall, the better. There's another comment that came up. Hold on. I can't see that. Another important idea here is to make sure you don't inadvertently misclassify folks if they should be employees and are not allowed to be contractors. Yes. And that's another thing, like if you got 1099 folks, they have to handle all their tax obligations like on their individual tax return, right? So yeah, so if you got so that's typically a little bit easier to deal with from a business standpoint, because as long as folks, if you pay them $600 or less, you don't have to file a 1099 form, and anybody you pay $600 or more, you have to report a 1099. And that's where the obligation stops for the business, for the co-op, is reporting that 1099 income, and then that individual member who received the 1099 has to report, self-employment tax and all of that stuff that goes with 1099 income, which is where like there's no taxes being withheld from that income at all. And we got 4 more minutes. You could, I guess, stop the slideshow. We could just respond to folks' individual questions. Elizabeth, did you have a question?
No, I was on Luke. It's Lucas and I are having like a little side conversation, but I was just saying that like our co-op, because right now we're an LLC, we're converting to an LCA, limited cooperative association, which is what we have in Colorado. And I have everyone as 1099s, and our general group's vibe is like no employees, because it comes with all of this misclassification issues. It comes with withholding. It comes with W-2s. There's all of these additional laws that apply once you have an employee that as a startup, we just cannot afford. Like we want to treat people right, but realistically, it's like all of these regulations hit you when you have a W-2 and you have all this withholding, whereas W-9s, it's much more flexible as long as you stay within the rules of what is a contractor. And then for us, like I think Lucas was just saying, maybe we do quarterly patronage dividends since we're already doing quarterly taxes, and that our quarterly taxes would reflect the expense of the dividends coming out, and then we could have retaining that goes throughout the year. So that might be a great idea. And I think we're living in the space of like we're doing it one way as a startup and then it will look differently as we mature. but we're also kind of looking at what it means to have employees. And we're like, we like just having, what is it, K9 owners and 1099s, so that we're not even getting in the weeds of that. And we're doing the patronage taxation instead of subchapter T.
Yeah, I like that. Only thing with that situation is I wonder how do your members feel comfortable with handling their 1099 tax situation once it comes to them individually?
Yeah, I think that we have kind of a secret advantage, or not so secret, but that our accountant is joining as a member. So our accountant is kind of in there with us, helping us develop systems and helping communicate with everyone like, hey, this is how your taxes are going to look. And like as someone who's done W-2 and W-9 taxes and as an owner, I'm like, it's really not that hard. And what's nice about the partnership model too is that because our member owners are pass-through entities, they can also write off expenses for the things that they contribute to the co-op. So if it's like, hey, I'm a small business owner, I write off on my taxes my internet, my phone, my computer, all my subscriptions that I use on the business. And now it's like if we do the partnership taxation and we hire you as a contractor as well, or whatever combination we do, you can now also write off your internet, your phone, your subscription without the co-op having to pay that for you. And that kind of just gives all of us more flexibility because we're virtual and we're all over the country, we're all over the world. And so it just gives us more flexibility because of our team.
That's exactly what we do with the Johnny Group. That's exactly what we do.
So you get it. It's like easier, and you do have that learning curve of like, how do I do this now that I'm a 1099? But it's not that bad. Like it's really not that bad. And our accountant is like holding our hands and helping us go through it. And that just makes it easier.
Yeah. Go ahead, Jason.
I just wanted to follow up on that a little bit. At least here in PA, to me, what Elizabeth has described sounds like it would really be a red flag for me for misclassification risk. Because the state has been coming after folks for what sounds like pretty similar stuff to that. And so just didn't you had kind of 2 cents to
protect against that. In our bylaws, we're straight up stating like we do not hire employees. And then we also do everything on a project basis. So it's like we do pay the living wage of where you live based on the MIT calculator if we're paying you hourly. And then if we have a project, it's this or that. And then the owner piece of it is like that's where you're participating in meetings. That's where you're not necessarily getting paid to sit in a meeting because we're trying to do the democratic process. But we've just said there's no employees. So with misclassification, if they look at us, it's like, hey, none of these people are employees. It's in our bylaws. We're following these rules. All the contracts we have with them are project-based and it says not an employee. And then because we're virtual in different time zones, we don't have, we're virtual. We don't have uniforms. We don't have shifts, right? It's like much easier to work around that. But I hear you that like being misclassified is a serious vulnerability. And that's what our attorney has tried to help us make sure that all our contracts, our bylaws, everything is very clear that you're not an employee, there's no W-2s anywhere in our team, and that everything is contracted on a project basis.
Yeah, Jason, and that's through the contracts is how we address that. Like if we were to, I think Johnny is formed in North Carolina. So if the state were to come out, we would point to the contracts and show that all the contracts are individually written by the members. Like there's nobody managing or has say in what is being done. Everybody's self-managing and leading their own projects. And so that's how, exactly how Elizabeth explained it, that's how we would address like the state if they, so you have to have a contract for everything, right? And if long as our backup documentation shows that folks are individually self-managed, then it's going to be hard for them to say that we had employees and they were being misclassified. Because what the state's worried about is that they're not going to get their withholding revenue, and that they're going to miss out on some revenue somehow. But yeah.
Right. With that, I'll just raise thanks, folks, for staying a couple minutes past the hour. We are at 7:02, and I want to respect folks' time. Thank you so much, Mavery. This was a great presentation, really great conversations going. I'll just reference too, we have our session survey in the chat. I'd appreciate if everyone could complete that, and also a link to register for future sessions. But otherwise, thank you so much, folks, for attending. Thank you again, Mavery, and you can expect a link to the recording and some follow-up in your inbox later this week. But thank you all so much.
Thanks, Hannah. Thanks, Mavery.